All right, welcome into Market Day Report. I'm Scott Shelley, otherwise known as the Cow Guy, and we're all excited to get going here today. It's one day post-WASD, right? So we should have a better idea about how things are trading. But also we got some consumer price index news this morning, which is what the government uses for their inflation gauge. And drum roll, please, folks, it isn't going to get any better anytime soon. I guess that's the best way to put it for you. Let's see what that's done to some of our price. Well, this is overnight. Let's get that out of the way first. Overnight corn, let's bring that up. Was down 7.5 in D's. 685.5 is last. March is off 7 overnight, 693. Soybeans, what did they do overnight? Well, they were down 13.25 cents and no to 13.82 3/4. We did have a high of 14.05, so we were trying to hang on to those two levels. You know, $7 corn and $14 beans ain't so bad, but if we got to hang out there though. January's down 13.25 cents, 13.91 3/4. How about the wheat in Chicago? What did that do overnight? Well, 14.5 cents lower in the front month East. 867 3/4 is last, it was last. March was last at 885.5, which was down 13.5 cents. Boy, oh boy. How about hard red wheat in Kansas City? 13 cents lower there, and that's the D's contract. 957 overnight was where we settled. 12.25 lower in the March at 955 3/4. Move on over to Minneapolis for those folks. 6.25 cents lower in that D's contract overnight to 960.5, and March was overnight to 967 3/4. That was down 6.25 as well. Finally, let's take a look at cotton. I'm almost afraid to look at cotton. Overnight down 232 points again to 82.60. We might get an 87 handle on that cotton. Boy, oh boy. All right, let's bring in our next guest analyst. He's going to sort it all out for us, right? Brian Hoops, Midwest Market Solutions. All right, Brian, make us feel better because right now I don't feel so hot.
I'm right with you, Scott. The numbers this morning were extremely disappointing. It shows that these Fed rate hikes are not having the desired effect as we have inflation increasing. The grain market sold off along with crude oil, the stock market, and the dollar rallied following those numbers that were released. So nothing really good coming out of it. The supply and demand report has come and has gone. We know the bright spot is the yields are coming down for corn, soybeans, and for wheat. The bad part is demand is also coming down and probably looks to slow even further because we have high freight costs, high shipping costs. We did have a couple private export sale announcements this morning, a couple soybean sales, 2 cargoes to China, a couple cargoes to an unknown destination. And I really stressed to our clients the last several days that as we get to the $7 area in corn and 14 in soybeans, that these are areas that you need to protect and need to lock in. If you're looking out ahead into, say, January, you can buy Brazilian soybeans $2 cheaper a bushel than what you can buy U.S. soybeans for. So there's not a lot of incentive right now for the farmer to sit there and hold inventory and hope that prices go higher. Really, the biggest caveat would be if we have a drought in Argentina, which we've had in the last couple of years, but Brazil looks pretty good. They're going to plant a lot of soybeans. So we've really changed our tune here as the harvest has gone on to starting to sell rallies and be defensive on these markets rather than just trying to gather the crop and store it, stick it in a bin, and expect higher prices through the winter and into the spring time frame.
Well, now that you brought up spring, I mean, it's going to be hard with these prices as far as inputs go. I mean, with where these boards trade, say D's 23 corn and Nov 23 beans, it's not looking too hot right now, is it?
Yeah, I think it's going to be a real struggle. Fuel prices have not come down. Energy prices haven't dropped at all, but fertilizer's still very expensive compared to a year ago. There's not that incentive right now to plant a lot more corn or soybean acres for U.S. producers. We'll plant what we're going to, but we may not plant as many winter wheat acres this year. We have clients in Montana that plant spring and winter wheat, but it's so dry there that they're just foregoing planting winter wheat and looking next year to plant more spring wheat. So we may, maybe we'll see less winter wheat acres through this year, but if that happens, it's likely to be planted into corn or soybeans next spring. And, it looks like it could be a real tough year. So I think producers really need to start looking at being defensive with some hedges or cash sales. And then if you want to be bullish because of lower yields in subsequent reports or drought in Argentina, you can buy call options and give yourself that upside potential.
All right. Yep. Get out that pencil, sharpen it up, and make sure it's got an eraser. All right. We're going to go away. We're going to pay some bills. We're going to come back and talk more with Brian Hoops from Midwest Market Solutions in Springfield, Missouri after this. All right, welcome back to Market Day Report. I am still a cow guy, and I like live cattle, but these are going to be yesterday's closes. Let's use those as a jumping off point, not literally, but that'll know where we are going to begin the day. Dees live cattle yesterday closed down 12 cents, 148.45. Feb was up 25 cents to 152.12, so that'll give you an idea about where we start the day there. How about feeders? Where we were yesterday, we closed Nova up 47 cents to 176.67, while we've got Jan up 17 cents to 176.90. That'll be a good idea to keep an eye on that. And lean hogs, well, they were up $1.17 in that D's contract yesterday, where we closed at 80.70. So we'll see how things look to open up here this morning. And actually, I've got the right guy to ask about that. Let's bring back in Brian Hoops from Midwest Market Solutions, Springfield, Missouri. Give him a call. He doesn't do this for free. Brian, what do you think? Where are we going to open up here this morning? What are your thoughts?
Well, you look at the cattle market, stock market just getting creamed this morning. Obviously, that's usually a detriment to the cattle futures and could be right on the opening. But you also have corn futures down sharply, and that should be a little bit supportive to the feeder cattle market. So you might see a bounce in feeder cattle in early session, and that'll be supportive to the cattle. Now, we're hearing very little cash cattle trades so far this week, but it does appear that 146 is being offered, but probably would be willing to take 145 in the Southern Plains. That's about $1 higher than last week's trade and would produce some short covering or some hedge lifting. So I think you eventually see the cattle market try and rally off of some of this cash news of steady at worst, probably $1 higher money being traded today. Dress trades, same situation. They're kind of nibbling around that 230 mark, but 232 would definitely move some cattle, and that would be at higher money compared to a week ago. Yeah,
we've got some conflicting signals out there. I'm just going back to a little bit of the equity markets, because you mentioned how sometimes they can affect some of these meats. We've had some decent earnings the last couple of days. Pepsi reported yesterday. We had Delta this morning, and it hasn't really come through. Although we have seen some consumer numbers saying that they're starting to pull back, it hasn't come through and say a profits recession yet for the U.S. Corporations. When that starts to break a little bit, maybe we'll see. But I tell you what, it's going to be a real big fight here to keep these customers coming back for more when we might have a shortage of beef and the customers also got a shortage of money, right? So we got a little bit of a problem on our hands coming up here. But I really appreciate you coming on. A great way to start the day. Brian Hoops, he knows what he's doing. Give him a call, Midwest Market Solutions. He's in Springfield, Missouri. I am in Nashville, and I get to say good morning to the great Suzanne.